Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, Chinese e-commerce giant Alibaba has now purchased 33 million, yes, you heard correctly, 33 million shares of online deals website Groupon. Tracey, Ryniec, Dave Bartosiak here with me to try to make some sense out of all of this. And I say that half jokingly, but not half jokingly, Tracey, because nobody knows what to make out of this now that Alibaba has this 5.6% stake in Groupon. I mean, is this just a diversification of their business model or what?
Well, at first when I heard this news, I thought, well, that's a dumb investment. You know, why would they be doing this? But the more I drilled into it, I can see why they're doing it. Some companies will buy shares in other businesses, mainly to learn from them. And I do believe that's what Alibaba is doing here, because they even said it's to exchange ideas or information. And they actually do run their own coupon, small business kind of deal website on their own that they're trying to expand. So I think they are trying to learn from Groupon, who has been in this game a long time. You know, they were the biggest and the first in innovator, and they've struggled, but now they're starting to turn it around a bit, and they're finding their way in their niche. And I think Alibaba wants to basically, you know, go in there and pick their brains.
Could this in any way, in your mind, be a gearing up to take on Amazon somewhere down the road?
No, I don't think so. Amazon tried to get into the space because they bought Living Social, and then they had to exit that business because they couldn't figure it out either. So no, I don't think this has to do with Amazon at all. It has to do with trying to compete against some people in China and the rest of Asia that are in this space. And again, just learning from Groupon and their business expertise, what's working and what's not.
All right, Dave, taking a look, you got two charts this time for us. Taking a look at Alibaba and Groupon, both stocks down on the year. Groupon reportedly lost 86% of its value since going public more than 4 years ago. So not good pictures for either one that way.
It's not. And first we're going to take a look at Groupon just to show how expensive that tuition payment is for Alibaba right now. So shares, I mean, that's
Not
just
very.
about that's as miserable as you can get, though. I mean, the thing came down to, we bounced at almost $2, right? Came all the way down. This shows $4, the spike on the news of the Alibaba interest there.
Right.
Today, I think we're down 9%. Today being Wednesday, the 17th. Michael Jordan's birthday, by the way.
February.
Happy birthday, Mike. No, so you got a little bit of a rally there. I think that's just a reaction to, 33 million shares coming in here. I don't think it's, a major shift in this chart, just kind of a bounce. Otherwise, we would have seen some more follow through on it, I think, if it was anything game changing, sort of like we saw with Oprah Winfrey in Weight Watchers. I mean, that was kind of a game changer. I'm not sure that Alibaba coming in and trying to learn about coupons is the game changer for GoPro.
Okay.
I mean, not GoPro.
Groupon.
Right.
Definitely not.
Alibaba, yeah, definitely not. Definitely not that.
Right.
Alibaba, on the other hand, last we got bearish on it. I got bearish on it last time. And the stock went up directly in my face. And so now it's come back down to that same sort of $50, $60 level, high 50s, low 60s. A little bit of a bounce on that news, but it's also, I think it's kind of bouncing with the rest of the market too. So I don't necessarily want to chalk that up to buying a bunch of Groupon. But I'm kind of scratching my head as to why.
I mean, can we even tell at this point, is it a better deal for the Alibaba shareholders or the Groupon shareholders?
I think it's a better deal for the Groupon shareholders, definitely in the short run.
All right.
Because you got this big buyer, that pushes the shares up. I mean, 33 million shares. I don't know what the average volume is on Groupon right now, off the top of my head, but 33 million shares coming in. Definitely going to take a chunk of that. So it's going to take a little bit to work itself out, I suppose, for people selling into it if they are, in fact, going to sell into it. So, but Alibaba is kind of bouncing here off of this, off this support level. So I could see this run up a little bit, regardless of this Groupon news. I just don't see how this is a big game changer for Alibaba.
No, it really isn't, except, it's not about the investment in Groupon, like I said. I think it's just more about learning what it is has been working for Groupon, what hasn't been. I mean, they've had to pull out of some countries, and they're consolidating. And I think Alibaba just is trying to gauge a better way to do the business through Groupon instead of learning on their own. Like, this is a faster way to get in there and get expertise than building it on their own.
It's also $100 million way to do it.
It
right?
is.
I mean, that's a lot of money to pay to learn about coupon. They don't have coupons over there? Is there an extreme couponing show in China? We need to bring that over there to them. They can figure it out from there.
They're spending more than $100 million to try to grow that business. Apparently, it's about $1 billion. So $100 million, that's nothing.
All right, well, Tracey and Dave tried to sort that one out. We will see exactly how this pays off going forward. And if you're watching our videos on the YouTube platform, don't forget you can subscribe to them there and even comment on them. Feedback's always welcome. With Tracey and Dave, I'm Terry Ruffalo.